Interesting fact. So the technology spider sector ETF XLK has outperformed the S&P 500 or SPY ETF by 21%. However, Alibaba has underperformed tech stocks by 60%. So one famous investor by the name of Michael Burry thinks that Alibaba is way undervalued. It's so undervalued that he has it as his number one most weighted stock in his Scion Asset Management hedge fund. He owns 75,000 shares valued at 5.81 million, and he actually increased it recently by 25,000 shares. Now going to the monthly chart, I originally had a target at $60. However, if you look at the weekly chart, the more that price kind of hangs around this zone, it's eating into any remaining unfilled sell orders, putting the zone in jeopardy of being breached and price closing above it. Now, before we look at things on the daily chart, let's actually look at this article. Michael Burry just went all in on Alibaba, one value bet. So the widened performance gap just became attractive enough for major investors like Michael Burry to start going into the stock, not only buying it, but making it the biggest position in his entire fund. Out of all the worthy mentions in the nation, why did Burry decide to buy Alibaba as his primary choice, with only a secondary and more minor position in JD.com? Well, let's dig in. Despite underperforming the technology sector, Alibaba counts with much better momentum, considering it trades at 71% of its 52-week high. Because it is a conglomerate in China, Alibaba's huge cash flow is often invested into other businesses and equities as well. So you have tentacles in other businesses, which kind of helps and diversifies risk. During 2023, when the Chinese stock market reached a 5-year low, who didn't take a loss by investing in the country's businesses? Alibaba's balance sheet wasn't immune to this, as they reported an impairment charge of roughly 7.4 billion during the quarter, severely understating the company's true earnings power. Now, pro analysts like Burry know that these changes are often added back to the company's figures to reflect what happened, which probably led to the conclusion that Alibaba stock is undervalued today. Knowing what you know now, it shouldn't be surprising to learn that Wall Street analysts have a $115 per share price target on the stock, which means that there is 54% upside from current prices. So, are you going to follow Burry's lead? This is the daily chart. Again, you can see how price has penetrated this weekly seller's zone at $78 three different times. And again, the longer it keeps jabbing at this zone, it's like a dam. At some point, it's going to break. Now, you do have another level of resistance at $83, and that's the 200-day moving average. So even if price closes above this level here, it has to contend with the $83 level where the 200-day moving average sits. Now, if I squeeze up the chart, if it gets above 80, it's going to be back in this sideways price action. However, if it does get above, the momentum will probably be to the upside at that point. And we can see from the RSI, prices are making higher lows, implying that the momentum has shifted to the upside. Now, analysts have a 115 price target, And that would be above this sideways price action. I mean, you're talking, again, almost 50% upside. I can't see that happening overnight, but anything is possible in the stock market. Let me know what you think. Is Michael Burry on to something, or do you see more downside risk in Alibaba? Thanks for watching. Subscribe. Please like the video.